We are live. Welcome back to the Pulse here with the PeakBot team. I am Dillon, co-founder and co-host, joined by Ben, co-founder and co-host, as well as Thomas. Thomas now a regular on the Pulse show here. Thomas, how you doing today?
Pretty good. No, pretty
Fantastic.
early.
We're
That's
excited
good.
to have you.
That is good.
On today's show, we're going to be going through some regularly scheduled programming as well as a few new things. We're going to take a look at our watch list. Ben's actually going to walk us through how to look at an options chain due to our watch list having some updating issues on Sundays here. By the way,
We're working on it. We're making some updates to the watch list.
as always, for the benefit of the trader, the PeakBot trader here. So it's also just a note, this is a pre-recording. We're recording this on Sunday. It's Sunday morning here, but the show will still be posted live on Monday morning, so you'll be able to see it. From there, we'll take a look at a couple charts. We're going to then kick it to Thomas to talk about the new trend spread bot. We're testing this internally. It's going well. We're going to take a look at some of Thomas's trend spread trades from this last week on his Tradier account. We're going to do a PeakBot picks competition update. Again, just for a reminder for anybody who's not familiar, we are rolling out a new stock picking competition. Paper trading, if you will. You're not actually having to place these trades. Just submit, anywhere from 3 to 10 picks per week from our watch list. We're handing out some cash prizes this month of March. We're doing it with our affiliates, and in April we'll be rolling it out to the general public. Limited seats. So if you're watching this and you want to get involved, let us know. I'll put our phone number up on the screen here. Feel free to text us at this number. Let us know that you want a seat, and we'll get you in $500 in cash prizes starting in April here in 2 weeks. So, and then from there, we're going to go take a look at my portfolio. I'll be making some changes, and I think that's it. So for anybody who has questions, again, we won't be live, but feel free to message us if you're watching this at any time. We're available and happy to answer any questions you might have. Also, happy St. Patrick's Day. I think that's today, Sunday, right? Today's 17th.
I think it's today.
St. Patrick's Day. So happy holidays to the
Corned
Irish
beef and
nation.
cabbage. Do you guys like corned beef and cabbage?
Absolutely.
I love cabbage.
No.
Wait, what did you say, Thomas? You said you
love
like cabbage?
I love
Oh, you're crazy.
So
I don't know
good.
anybody who loves cabbage.
No, it's like my favorite vegetable. If it's even considered like a vegetable, I guess.
I didn't know this about Thomas. I'm kind of concerned.
Good.
I'll tell you what I love. I love a good Guinness. I love a nice pour on a Guinness. That's my celebration. So anyway, let's get into it. Ben, I'll kick it over to you to take a look at our watch list as well as the option chain, just for anybody who might be looking at the watch list today or tomorrow and realizing that some of the stock prices are underneath the sold strikes or anything else a little odd. Just having a little bit of a hiccup with pulling data on Sundays for whatever reason. We're getting it solved. But Ben's going to walk you through on how to make sure that you can get this done properly and get your picks in this week. So, Ben, I'll kick it to you.
Yeah, sounds good. And just to add to Dylan's note there, all prices should be back and updated as soon as the day turns over to Monday. It's just an issue with our data provider for Sunday data. So I'm going to pull up the watch list here. The order of the watch list right now should still be the same, regardless of what the data says. So again, we sort this watch list in order of, we want to take a look at the lower risk level stocks first. We sort by lower, moderate, high risk, and then higher risk or very high risk. Those stocks find their way onto this removed tab here. And then secondarily, we're filtering by trend. So bullish to neutral to bearish. And then finally, we're sorting by this column over here, our weekly put premium percentage. And all that's doing is it's taking the amount of dollars you can earn from our weekly puts, our weekly premiums on these sold puts into the estimated amount of cash you need in your account in the case that at expiration you get assigned shares, and you actually have to wind up purchasing 100 shares per one contract that you're selling. So again, as mentioned, this data is a little bit off right now. We are making some live updates to it, getting ready for this coming week. But I think that really opens us up to, showing you how you can find the strikes that you could be selling anyways manually, right? Or, if you're not always looking at this watch list and you're in your Tradier account or something like that, where you can go to find the different strike prices and kind of just calculate on your own the premium that you could be earning. So I'm going to take DraftKings off of this. I do like DraftKings. I'm going to head over to my Tradier account, and I've recently started experimenting with Tradier paper. You can do that very easily just by clicking here. Everybody's got a sandbox account here in Tradier, so you can hop in there, practice any type of trading strategies that you'd like. Pretty cool feature, really easy to use. So you're not actually spending real dollars. You're not actually buying or selling anything, really. It's all a simulation. So I've gone here. I go to the chains tab here, and I just typed in ticker DKNG. That's DraftKings Inc. And I'm going to go down to the options chain here. And if you scroll, you're going to get to a point where the colors kind of change here. And that's, indicating that this is pretty much at the money. These strike prices, which is this yellow column here, these strike prices are at the money. On the right side, we have our put data. On the left side, we have our call data. And there's a lot on screen here, but what's going to be relevant to us is going to be this bid column, this ask column, and then this delta column. Because what we do in PeakBot and how we automate our trades, we base the strike that we're selling or buying off of the delta. So again, we've got the put side on the right, we've got the call side on the left, we've got our bid, we've got our ask, we've got our delta, and then on the call side, we've got our bid, we've got our ask, we've got our delta right here. So we'll go over both sides just so we are 100% clear. So when looking at DraftKings, DKNG, we know that we're setting our strikes at the 30 and the 10 delta. And when we say that, it's going to look a little bit different on the chain here. We see the minus 0.30. That's around the 30. Now, the logic that we use for PeakBot is we do want to be higher than the 30 delta because this is a negative number. Higher just means closer to zero. So we're actually going to use this as the strike that we're going to sell. So if PeakBot were to be entering a trade right now at this second, on the put side, selling a put credit spread for you, it would sell the $40 strike price because, again, this is closest to but greater than the 30 delta. And we would earn, we've got the bid and the ask here. The bid is what people are willing to buy this strike price for, contract at this strike price for, and the ask is what people are willing to sell. So there's a 2-cent gap here. And what the bot will do for you is it'll set your sell price at the bid because we want to get filled. So we've got potential to earn 39 cents in premium, multiply that by the 100 shares per contract. It's about $39 in premium you would get for selling this strike price. Now, we also know that we're going to set up a spread, or the bot will set up a spread for you. The spread's going to buy the 10 delta, greater than or equal to the 10 delta. So we could see the 10 is right here. However, it's slightly less than 10 just due to this minus here. So we're actually going to go up one, and we're going to sell the we're going to buy, the $38 strike. So we're selling the 40, we're buying the 38. That's creating a $2 gap. Now, if you take that $2 gap, multiply that by 100 shares per contract, that's a maximum $200 loss. And that gets triggered if at the end of next week or at expiration, the stock price is below this $38 strike. That's when that whole loss will kick in. Now, statistically, the way that this is set up, that'll only happen about 10% of the time. And based on this delta, even a little less than 10% of the time. So it's very rare that does happen. It does happen on occasion, and we do set up these spreads to protect your account from further downside. It's nice to have a maximum loss rather than holding something that drops 40, 50, even 60%. And we see that sometimes over earnings seasons. We see some volatile stocks make some big price swings, and it's really not worth it. And I'll tell you why in just a second. So, think of this as an insurance policy. We're buying the 10 delta. We're going to buy at the ask because that's what people are selling. We want to go to where people are selling. We want to get our orders filled. So we're going to be buying at $11. So if we take this $39 or 39 cents that we're selling at, and we subtract out this insurance policy that we're buying to create this max loss, well, we're protecting our account from further downside, and we're giving back $11 of our premium. So overall, we'll be earning 39 minus 11. That's 28 cents or $28 in premium on DraftKings in a week. And that's fantastic. So realistically, you only need $200 in your account to make this trade. That's how the spread is set up. But in the case that you were assigned, you would get assigned at $40. And that would only happen if at expiration, the stock price finished between $40 and $38. So if it finished at $39, we would get assigned shares at $40. And that would be, we would be forced to buy 100 shares at $40 a share. We would still earn that whole $28 premium, but we would have to have $4,000 in our account, and that's just the 40 times 100 shares. We would have to have $4,000 in our account to actually buy those shares. So when we're looking at our return based on premium here, we're earning $28 in premium. We need $4,000 in our account to make that trade. So what does that work out to? Like a 6 or 7%?
Yep,
or
7%.
So it would be a 0.7%.
Yeah.
0.7% return on the cash you need in your account. Now that's fantastic. You compound that week over week. You really start to see some good results here. So that's how you look at the chain.
And I have a question before
Yeah.
you move on, if you don't mind, just for the layman, if you want to go back down to the chain. So it seems like for the sold strike at the 30 or closest to the 30 delta, you're looking at the bid. Then for the bought strike,
Correct.
you're looking at the ask.
Yep.
Okay. I wanted to make sure that was correct.
Yep. And again, that's because the bid is what people are willing to buy at. So we're starting off by selling, or opening our position by selling the $40 strike. And if we're selling, we want to sell to somebody who's buying, and we want to make sure our order fills. So we know people are currently buying at this 39-cent level. We know there are other sellers in the market right now that are wanting to sell at 41 cents. We're not greedy. We want to take our 0.7%, get our order filled, and move on with our life. So we're happy to go down to the 39 cents that people are wanting to buy at. And so it's basically like saying, Dillon, you want to buy this for $39? I'll sell it to you for $39. And then the opposite is happening at the $38 strike. We're buying here. So, Dillon, you're selling a $38 strike for $11. Okay, I'll pay you the $11. I'm not going to sit here and say, I'm only going to pay you $9, and then hopefully we end up at 10. I want to get in. I want to get out. I want my automations to do their job and not have to worry about orders getting filled.
Excellent. Okay, thank you for clarifying that.
You got it. So this isn't the only factor. And we're going to look at the call side in just a second. This isn't the only factor. You're going to want to go to this research tab. Type in the ticker you want to potentially trade. I like looking at the chart here. I like looking at the 1 month. Looks like a pretty decently wide range. It looks like a 10% range-ish, from a little over 10%, from like $40.50 to $45.50. So maybe like a 12, 13% range. But if we look over the past, 2 weeks or so, we're trading in a bit of a tighter range. So we already established we'd be selling the $40 strike, which is lower than the low on the chart here. You can't even really see it. So we would have to form a new monthly low in order for DraftKings to actually get assigned shares this week. So that's pretty encouraging. And again, it's a pretty tight spread. Looks like we've got some solid support around the 47, I'll call it 47.50 level, or 41.50 level, sorry. So can't really determine trend based on this short-term movement, but hey, a neutral trend is a winning trend. when we're trading the wheel strategy here.
Yep.
If we look at technical analysis, and this is just a cool tool that Tradier offers on their website. I like to switch this to 1 week. When we do that, we see that we've got only one sell signal, we got 10 neutral signals, and we got 15 buy signals. So again, trading the wheel, at least on the put side, is a bullish to neutral strategy. So if we add the buy and the neutral signals, that's a score of 25-1 against the sell. That's pretty solid. So for me, DraftKings is a pretty decent candidate for trading on the wheel this week. Now, I do want to look at just one more stock. I do want to show the call side. I want to pull up Wayfair, which right now on the watch list is, I think, a moderate risk level bullish trend. So let's say that we were assigned shares of Wayfair. What's going to happen is we're going to start selling a call credit spread. And we sell the call credit spread at the 50 delta and the 20 delta. So if we look here, we've got the 51 here in this delta column. It's a little too high, so the bot's going to go down to the next one. So we would sell the $62 strike. We would collect about, Dylan, I'm going to need a calculator from you here.
Sure, go ahead.
We're going to collect about $169 in premium. So pop in $169 and just hold that there. And then we're going to be buying the 20 delta. So go down here. We've got the 20 delta right here. We're a little above it. So we're going to pop down. The bot's going to sell the $67 strike. And we're going to be buying that for 55. So take that 169, subtract 55 from it. What do we have there?
114.
So we'll be collecting $114 in premium by selling our call credit spread on Wayfair this week. So again, we would be selling the $62 strike, buying the $67 strike. If at expiration the stock price is above the $62 strike, those shares that you own will be sold at $62. And the value, as the stock price keeps increasing over the course of the week, the value of this $67 strike will continue to increase as well. And you could make a pretty decent profit on that by the end of the week. You know, we've seen people selling these call credit spreads where they do get their shares assigned at the end of the week, but they're making like, 200, 300, 400% on these bought calls. And the bot will, our strategy will automatically exit this position, this bought call for you at around 10 a.m. on the day of expiration. So that's how you could find the put credit spread, the call credit spread, and how you should, how you could use charts and technical analysis to determine your trades. So I know I just did a lot of talking. Let me know if you guys have any questions. If not, I think it's a good time to pass it off to Thomas.
I think we're good.
Cool.
Thank you, Ben. Very helpful. Again, for anybody who might be looking at the watch list and wants to know a bit more how to pull this manually, that's a great lesson on how to get that done. So appreciate it. Thomas, we can kick it over to you just to set the table. Again, we've been trading the new trend spread bot. For anybody who's been with us here for a little while, they know that we've been working on it for quite some time. We're very close to getting it ready and available to our PeakBot subscribers and anybody on their free trial. So we'll kick it over to Thomas here. Pull up your screen, Thomas, and we can just talk through your trades. And maybe if you want to, Thomas, and we can talk through it with you, maybe just take a second to talk through the strategy behind trend spread, like what's actually taking place, how's it work, what are the benefits as opposed to the wheel, and that kind of stuff. And we can pitch into.
Yeah, so here are my trend spread trades for this week minus Carnival Corp that I have trading on the wheel. I have Amazon, and it's determined that it was a bullish spread. So it's selling puts this week. It's selling the $170 put, bought the $162.50 put. So pretty much it's got to stay above 170 for me to win this trade. For Alibaba, it's saying that it's going to be bearish. So it is selling the $80 call, it's buying the $80 call, selling the $76 call. And then what was interesting this week is that I have a bullish, bearish, and neutral. So it's set up an iron condor on PayPal. So I have to stay within this certain range of 61 and 68 to
Thomas,
see
can you zoom in a little there? I just want to get a
Yeah.
closer look at this iron condor.
Yeah,
And when you say it's setting up, you mean the trend?
Sorry,
The trend
trend
is
spread.
determined. Yeah, the trend is
Yeah.
determined to be bullish, bearish, or neutral, and then the trend spread bot is setting these trades up for you.
It trades with the trend. Let's just take a second to talk about that. When you look at our watch list and you see the trend column, bullish, bearish, neutral, this bot is taking another decision off of your plate. With the wheel right now, we're looking for neutral activity or bullish activity. With
On
the
the
trend
put
spread
side.
bot, it's going to go with whatever the trend was that week. And that trend is set on the 67-day EMA, unless that's changed. I believe that's still where we're at.
Yep, it is.
So it trades with the trend. And what's great is you're not going to be assigned shares on this bot. Okay, we're going to roll the contract. I believe we roll it every week regardless. Correct me if I'm wrong, fellas.
Yep.
Regardless of the performance of that contract that week, we're going to roll the expiration to the following Friday, correct?
Yeah, and we'll
So-
make adjustments if the trend has updated in that time period. So if you sold a put credit spread this week because we determined there was a bullish trend, and for some reason over the next week that flipped, turns into a bearish trend, we're going to close out that put credit spread and we're going to sell a call credit spread.
Fantastic. So yeah, go ahead, Thomas. Let's take a look at this PayPal here. So this is the Iron Condor one.
Yeah, so I'm sorry, I might have said it incorrectly. It sold the $65 call, sold the $61 call. So now I got to stay within this range, and that's going to be considered neutral. So it just kind of stayed between those prices. And then
Gotcha.
same thing with Dash as well. It's going to be put, so it's going to be bearish. Or sorry, bullish, I'm sorry.
It's okay. We forgive you. So Thomas, I think one of the cool things about you testing this in your account, how much cash do you have in this account?
This one has 3,500 now. Cash.
Okay. So what's
I think it's
beautiful?
around 27.
Okay. So what's nice about this new bot here is the fact that you can now, and we'll just keep it up there in case people want to look at it. Feel free to zoom in a little bit. What's really nice about this bot is it allows smaller accounts, okay, or accounts of any size really, to trade more high quality, more established stocks. Okay, so the reason why, if we were to just take a look, I'm going to pull up my screen for just a second and give an example here. So I'll zoom in and we'll take a look at Morgan Stanley. I know this wasn't one of the trades he made, but just as an example. So Morgan Stanley's on here, and it's a more expensive stock, right? Normally for the wheel, you would need to set aside $8,600 because that's your sold strike price.
Hey,
times
Dylan,
100.
zoom in a little bit. You can't
Sure,
see the numbers.
Hold on one second. Is this any better?
A little bit.
I don't know. I'm not going to be able to get much tighter than that and keep everything on screen. I can eliminate us. There
That
we go.
works.
So right here with Morgan Stanley, as I was saying, our sold strike is $86, which means you need $8,600 to set aside just in case you end up getting assigned the shares on the wheel strategy. However, with the trend spread bot, the reason why Thomas was able to trade more quality and more quantity in that account is because you're never going to get assigned shares, which means you only need to set aside the cash needed for the spread. So Morgan Stanley over here, we can see it has a $2 spread between $84 and $86, which means the most you're risking on this put contract is $200, right? $2 a share times 100 shares. So that's all you need to set aside to trade Morgan Stanley on the trend spread bot, which is fantastic, right? Because a lot of the times Thomas, if this were the wheel, you wouldn't be able to trade this in your account. You don't have the cash.
I traded Amazon. You need 17,000, so I only traded with I think 600. I think it was 6.5 point spread.
That's a great example. I should have just done that in the first place.
Yeah.
But yeah, it's another great one here. 17K, needing over 17K in your account just to trade Amazon. No longer the case. 500 to make 47, right? I mean, we love that. We absolutely love that. And maybe if we come out with a new trend spread watch list, because it is also, fellas, correct me if I'm wrong, we're going to have more stocks to be traded than we have on the wheel.
Oh,
we're
yeah.
about the same. Okay.
We're gonna introduce stocks that haven't historically been on the watch list, like Tesla, for example. Tesla has not been on the watch list. Nvidia, very high dollar value stock right now. Doesn't make sense to trade the wheel on it because the premiums you're going to earn based on the cash you need set aside, it's just not there. We'll have the SPY, we'll have the Qs. So yeah, some very popular and highly traded options chains will be on the trend spread. So there will be a new watch list made.
Excellent. And I think we should probably adjust the return percentage, right? Because
totally, yeah, it's based on the max loss.
Right. So, Thomas, what do you think about the trend spread bot so far testing it? Do you think when it's live, are you gonna totally ditch the wheel? Are you gonna do both? What are you thinking?
I'll probably do a little bit of both. I mean, it grew my account from, I think that one was at like $2,700 to $3,500 in 2 weeks so far, 3 weeks, which was pretty nice. So, yeah, right now it's at 3,500 pretty much. I think I lost one trade so far, which has been pretty good. It was actually on PayPal. It was bearish, but then it popped up later in the week. So it was all right. It was down. It was a winning trade Monday, Tuesday, Wednesday, lost Thursday, Friday. So not much you can do about that there. But yeah, overall, been a pretty good trading so far.
Love to hear that. Excellent. So again, we will be having beta testers for trend spread. Know that any beta tester for this bot, or really any new bot, isn't gonna touch it before we've worked on it ourselves and live traded it and tested it for at least a month. So that's what we're doing now. But if you're interested in getting in on trend spread early, let us know. Message us. There's a million ways to get in contact with us, which we pride ourselves on. So just let us know. Anything else on trend spread talk before we move into a PeakBot picks update?
No, let's keep it moving.
Let's keep it moving. So let's talk PeakBot picks. So again, I mentioned it at the top of the show. We have a new competition that we're rolling out in April, $500 in cash prizes available. All you need to do is select anywhere from 3 to 10 stocks from our watch list weekly. You're actually selecting specifically put contracts. Okay. So if we take a look here, you're going to be selecting from the left-hand side of the watch list with these strike prices in this premium here. You're not needing to concern yourself with the call data all the way on the right-hand side. So there's a reason why we say pick 3 to 10. Okay, so this is a points-based competition. All right. Somebody might be saying to themselves, well, if I can pick 10, why wouldn't I pick 10? Well, the reason is if you pick one and it's wrong, you're not just not getting a point, you're losing a point. Okay, so it's +1 point for a correct pick, -1 point for an incorrect pick. Okay, so it's a 2-point swing when you get one wrong or get one right. So that's rolling out. We have a leaderboard here. You can track all of this with hashtag PeakBotPicks across socials. Mainly we're on Twitter or X. But let's pull up the leaderboard here. So I'll zoom in. Right now, these are our affiliates. Okay, I guess it's not as easy to zoom in as I'd like. Okay. So this is our leaderboard right now. Dan selling for premium, dominating the rest of the field, double the points of anybody else. He's one who rolls the dice and picks, I think he's selecting maybe 10 a week for the first 2 weeks, and it's paying off for him. Then we got Steven, KC Trades. We got a big tie for second place here. May I mention myself involved? KC Trades, Ken Suna, Arlissa, Tom from Algo Trade Alert, myself. By the way, if you're watching this and you're a fan of us here at PeakBot and the education and the automation that we've done, these are really great educators in the world of stocks and investing and options. Check out their content. They have Discords, they have social channels, websites, live shows. They're all fantastic. We wouldn't partner with them if they weren't. So check them out. As we move down the list here, we got Shark at 5, Thomas at 4. Hates, sucks to be you, Thomas. Paul at 3, and then we round out the bottom of the leaderboard here with another member of the PeakBot team, John, and a couple more of our influencers. Pounding the table, fellas. If you're watching this, get your stuff together. Let's go. Pick it up. So if we're taking a look at the picks here, these were from last week. I'll now zoom out just a little bit. So we're going to move down to this week. And we'll just take a look at some of the picks here. So KC Trades this week went 3 for 3 on Carnival Corp, Chewy, and FCX. All finished well above the strike, the sold put strike, which is great. We got Ken here. He selected 4, went 4 for 4 this week. I guess pretty good. I'm not saying that these aren't good picks, but I think the market helped a little bit this week.
That'll happen. But
that'll happen.
Yeah.
Rising tide raises all ships. I don't know if that's actually the saying, but anyway.
But it's a good note to like pay attention to market movements too, right? Because you mentioned if you get a pick wrong, you get -1 point, and it's not just 0. Like those might be weeks where you entered just 3 picks because we were going 3 to 10 picks. So if you're anticipating a drop in the market, at least for this competition, it might not be a bad idea to maybe sit on the bench as much as you can.
Yeah. And you can see that sometimes because, Ken even made a bearish trend, again, based on the 67-day EMA and a few other factors, but still outperformed his strike. We're going to move into Arlissa here. Arlissa is one who makes, actually this week, how many did she make? Yeah, I think about 10 again. So if we look here, I think Arlissa had a couple losses. So Disney, Exxon, Amazon, Intel all did well for her. Snap, not so much. Didn't miss it by too much, but under. DraftKings worked out for her. And then unfortunately, she had a little bit of a slide here. Palantir, Taiwan Semiconductor, AMD, and Rivian unfortunately missed on all fronts here. Boy, AMD took a big swing.
Yeah, it did. I hate to say it too, but these higher risk stocks are the ones that people are losing on.
Yep, more volatility for sure. So, and then we go here. I went 3 for 3 on Exxon, Oracle, and Morgan Stanley. Again, I don't need to review everyone. You can see some stocks being picked, multiple times, So Krishna went 2 for 3, Thomas 2 for 3, Shark 3 for 4, Knots 2 for 3. So, we like to see we like what we see here. Competition's going well. We're getting some good feedback. There might be 1 or 2 more things we clean up or change before we roll out the competition for the general public in April. But again, here's the leaderboard. Right now, Dan's steadily in the lead. I'm probably going to get some more picks in this week. I haven't made all of my picks yet this week. I'll just mention quickly 3 of them that I am looking at. I'll make sure I have them submitted by tomorrow at 11 a.m. because that is the cutoff. Tomorrow meaning Monday. I got United Airlines, Morgan Stanley, and General Motors. I like those 3 this week. I think they're safe picks. We'll see. Not financial advice. Stamping on my forehead.
DraftKings look pretty good too. You might want to look further into that.
I might, because after you looked at it, I'm adding it to my portfolio this week. So in fact, let's move into that unless you guys have anything else.
Let's do it.
Let's move right in. All right. So I'll share my screen here again, and we will take a look at my account. So just a quick note on results. This wasn't mentioned in the pre-meeting brief here, but I'm just mentioning it now. If you're looking at your results in your PeakBot account, if you're a subscriber and you're looking at your results in your PeakBot account, and then you look at your results or your account balance in your broker account, and it's not 100% matching up, let us know, and we can explain what some of the differences are. We're getting better every day and every week at making this easier and easier to read, to make sure that you can look at both PeakBot and your broker and see a similar message. Our data, for the most part, in results is accurate, but what's maybe confusing to people is when you look at 1 month, that this chart's going to look different every day that you look at this because it's pulling the last 30 days. So we're thinking about making a change and just showing an all-time report for results. Again, nothing set in stone, but I just want everybody to know that if you see any discrepancies or any double counts or anything like that, let us know. We're working on getting the results fully accurate. But anyway, so my portfolio last week, I traded put spreads on Delta, Tyson Foods, and Verizon. All three of those have been put onto our secondary watch list here, the removed tab. Okay, and we still, every week we say this, I still think we need a better name for it, but I want everyone to know that if you see a stock that you had in your portfolio and you can't find it on your primary watch list, whether you're doing spreads or naked, check this tab. Okay, now this tab, anything on here, very important to know, they're still tradable. Okay, but the reason they're on this list is for one of two reasons, really three, but two primary reasons. Either the risk level is too high. So as you know, on our normal watch list, we go up to high risk. Very high risk stocks are the ones that we put here, like UiPath paying 3.18%. If it were that easy, everybody would do it, right? I'm not saying it's not a smart trade. I'm just saying if you were to do that all year on this volatile stock, there's probably a time where you could get burned. The other reason it could be on here is if the premium, the net premium paid is under $10 a share. So you can see that's the case here for these three stocks, Beyond Meat, Novavax, MPW. They're all paying under $10 in premium, okay? Which after your options fees through your broker, with Tradier, it's, 35 cents, or you can sign up for their $10 a month subscription and pay zero options fees. But point is, there's better trades to be made here, just generally speaking, as opposed to earning $2 on MPW. So that's why that's why stocks would be moved in here. Okay. Now, all three of my stocks from last week, Delta, Verizon, and Tyson, moved into this tab, all for paying less than $10 a share. Okay. Or not $10 a share, $10 a contract. So ipso facto, I am going to be removing all of these stocks. I did not get assigned on any of these. So 3 successful put contracts, collected my premium, wiped my hands clean, and now I'm getting out of here. I'm bulk removing all 3 of them. This is a new screen. Let's take a second to talk about this. When removing a stock, okay, if you're going to do this in the middle of the week, first of all, if you're doing any editing in the middle of the week, just take caution, okay? If you own shares, if you own 100 shares or you have an open contract and you're removing the stock from your PeakBot portfolio, know that the bot is not selling your shares or closing your current contract, okay? The bot, when you remove a stock from your PeakBot portfolio, simply you're telling the bot, hey, don't do this for me again, meaning it's not going to enter a new contract next week, okay? If you're in one, it's not going to close it or sell your shares. So I like to do most of my editing on the weekend. In fact, all of it, because I know everything is settled. Okay, so I'm going to confirm, and those 3 are gone. Here's what we're doing. 3 stocks I'm adding this week. We're going with PayPal, DraftKings, and Lyft. So let me just get these on here. If you guys think I should pull them up on the watch list, I can. But being that some of the data could be slightly inaccurate, I'm just going to breeze by that. We're going with PayPal. What else did I say? DraftKings. Now, I'm going to add those both at the same time because I'm doing one contract or one spread per. However, with Lyft, I'm actually going to be doing 2 contracts for Lyft. So I'm going to add that separately because it's a different budget. I'm going to put 2 down here, and I'm going to activate it. So now I'm ready to rock and roll on the wheel. And I actually was testing trend spread myself. I'm going to get rid of these, and I'm going to add my good old friend and trusty steed, Carvana. Okay, Carvana is a great stock for me to add on trend spread. Okay, more volatile, all right, than I've been. Let's not forget that Carvana got me half my returns last year, honestly.
High risk, high reward.
Yeah, that's exactly right. So if we come back here, I believe Carvana is high risk. If we scroll, I'll take a look here. Sorry, my internet's a little slow, but I think it's paying about 1.5%. Yeah. So here's why I want to do this. Okay. I don't have another $7,400 in this account, in this broker account, to trade Carvana on the wheel in case I was to get assigned. But I do have an extra 500. Okay. So I'm going to add Carvana here. And I'm going to take a nice premium payday and hope that we stay above. Now, we've painted a nice picture with trend spread because it's a nice picture. That doesn't mean you're not going to have losses. Okay. You can still have your max loss. If I trade Carvana this week and we fall under $69 a share, I'm going to take a $500 loss, but I'm not going to take the shares. Correct, fellas?
Yeah.
Yes. Statistically, the chances of taking that full loss are, again, only a 10% chance because we're selling the 30, we're buying the 10 deltas on both sides for trend spread. And statistically, you will win over 70% of your trades on trend spread. Again, because we're selling the 30 delta, which has, again, statistically a 30% chance of finishing in the money. We want to finish out of the money. So that gives us pretty high odds of winning there. So you've got, and one thing that's important to remember with trend spread is the amount of premium that you're seeing on the watch list here. That's not going to be what you actually end up gaining at the end of the week because we are going to roll these contracts every week. So there might be some meat left on the bone by the time these contracts roll. So, not a bad strategy, Dillon, going after these higher risk stocks here. Earn a little more in premium, so that way if there is a little bit of meat left on the bone, you still get a decent return. Now, that said, when you're trading the lower risk stocks, those are less volatile. Those will most likely, their prices will most likely decay the most. And by the time we do roll, we'll probably have diminished in all their value if they're even, slightly out of the money. So that said, I just wanted to put that out, like the $100 and something you saw for Carvana. You might not actually get that full amount. You might wind up with like $90 by the time you roll. Still a great return though. And yes, the reason we do that is so that way we do not get assigned shares and you can only have $500 in your account to execute that trade with Carvana.
Excellent. So I'm going to add Carvana as well as DocuSign here because I have about $800 left over that I can trade. So I'm going to go with DocuSign as well as Carvana on trend spread here. Again, this is just testing, not yet available to our subscribers, but will be very soon. So I'm going to add these. Okay, we're still working on budget. That's transparently, I don't believe that's accurate.
That's part of our testing and trend spread right now.
Yep. So I'm gonna get those added, and that's my portfolio. As you guys can see, I'm starting to recover here. I had a tough January. I took a lot of realized losses on a lot of volatile stocks, but I'm climbing back. My account's above 14K again. Pumped, ready to go. We're really loving trend spread. So, again, if you want to be a beta tester, just let us know. That'll probably be ready in the next few weeks. Anything else, boys?
Not for me.
Yeah.
Cool. Excellent. Well, look, if you're a fan and watching this show and you think we should keep Thomas around, let us know. We're happy to give him the boot too. I'm just kidding. But appreciate everybody tuning in. Next week we should be back live Monday morning, 8:30 a.m. But if you have questions, you can find this at any time. Okay, these live recordings and the pre-recorded ones, they're saved on our YouTube channel under our live tab. I wonder if that's the case for the pre-recorded ones. I bet it's not. I don't know.
Probably not.
So you'll find this regardless. But if you have questions, let us know. Appreciate everyone tuning in. Have another good week of trading and investing. Thank you so much. And we'll see you at the peak. Take care, everyone.
All opinions expressed by Tradier Hub contributors are solely the contributors' opinions and do not reflect the opinions of Tradier nor its affiliates and or subsidiaries. You should not treat any opinion expressed by Hub contributors as a specific inducement to make a particular investment or to follow a particular strategy, but only as an expression of their opinion. The contributors' opinions are based on their own personal research, but neither Tradier nor its affiliates and or subsidiaries warrants its completeness or accuracy, and it should not be relied upon as such. Any trades or positions discussed or referred to by contributors may or may not be actual live trades or positions. Such information is not intended to be financial or investment advice. Tradier Inc. is the parent company of Tradier Brokerage Inc. Tradier Brokerage Inc. and Tradier Inc. are separate entities with their own products and services. Securities products and services are offered through Tradier Brokerage Inc. Tradier Brokerage Inc. is an independent subsidiary of Tradier Inc., all rights reserved, member FINRA SIPC.